pretty full crowd.
Well, it's a small room.
It's a small room, but I think there's a lot of people upstairs as well. Well, first of all, Peter, thank you so much for coming. I feel like I'm kind of a host here.
Wow.
So I want to keep it a bit civilized at the beginning. We'll see how, how it evolves. So first of all, I want to thank you for taking your time to come over here. And I think it's very courageous of you to step on this stage in this crowd. It feels like there's definitely a home court advantage for me here.
Yeah, well, I got some supporters in the crowd. But
absolutely.
Even if they disagree with me on Bitcoin, they agree with me on a lot of other things. But I definitely appreciate and thank you for hosting this event and bringing me out here. And at least you had the courage. I mean, I've been, trying to get Michael Saylor to debate me for years, and he's afraid. But
no.
you've got no problem.
I can arrange that for later tonight.
Try. Is he still in town?
He is.
Oh,
he is
all right.
in town. Yeah. So yeah, I want to give you a little bit of opportunity first. I know you're doing a eventually you will do a tokenized gold, like a project, right?
Yeah, that's how this whole thing got started, because I was talking about that on a crypto podcast that I guess you happen to see it.
Yeah.
But yeah, so I have, my website is tgold.com. So the T actually is for tokenized gold.
Yeah.
Was actually surprised Tether never grabbed that URL, but anyway, I took it. So tgold.com. And right now, if you go to tgold.com, you can buy physical gold and silver.
Yeah.
And we store it for you.
Yeah.
And ultimately, people who own gold and silver in this form, and it's segregated and vaulted. It's not commingled. It's not, it's allocated gold, not unallocated gold. So you own it. It's stored, in a vault. But ultimately, there'll be two ways that you can withdraw your gold. Other than sell it, you can sell it and just get dollars. But one way is to withdraw in physical form. Mm-hmm. You can take delivery of bars or coins in whatever denomination that you want, or you can also take delivery in the form of a token.
Yep.
And so when you take delivery of the token, and now you can deposit it in your wallet or put it on an exchange to the extent that we get it listed on an exchange, but you can withdraw the token, right? And what the token represents is ownership of gold.
Yep.
You own the gold, it's in a vault, but the token is the evidence that you own it. Like if you check, your coat and they give you a claim check, the claim check isn't a coat, but it's redeemable in a coat.
Sure.
And so the tokenized gold now is your ownership of gold. But if you want, you can transfer that token or any portion of it because it's divisible. You can transfer part of that to somebody else. And now that other person owns the gold. And so you transfer the ownership of the gold rather than the physical gold. The gold sits in a vault, but the ownership can change hands. And now you can use your token as a medium of exchange. And so now you have a viable monetary unit that is a store of value because it's backed by the gold that's in the vault that anybody can take delivery of. But in the meantime, you've taken gold and you've now made it more transportable, more divisible, more fungible. You've improved on all of its monetary properties, but you don't lose the most important property, which is it's a store of value, because its value is the gold that the token represents.
So what I'm hearing you saying is actually the tokenized gold is actually almost better than the gold itself in the ways that it's divisible, it's transferable, it's transportable, it's a medium of exchange, etc., right?
Yeah, as for money purposes, yes. Yep. Obviously, if you want to actually do something with the gold, if you're a jeweler, you have to take the token and redeem it. Right? If you're manufacturing computer chips and you need gold, you have to redeem the token. But as far as using it as money, yes, it improves on gold. Just like the old blacksmiths, right? Originally, when people had gold and they would have it stored with the blacksmith would write out an IOU, a piece of paper, which could then circulate in place of gold because it was more convenient. And that was currency. And when governments started currencies, they were legitimate because they were backed by gold. So instead of engaging in commerce with the gold, we used paper currency. Sure. But that currency derived its value from the gold that backed it up. Now, fiat currency is paper currency backed by nothing. And so there's nothing that gives it value other than faith and confidence. So tokenized gold takes that to the digital level, where instead of having a paper representation of ownership, I have a digital representation, and I don't have to be in the same room to hand you a piece of paper. I can transfer it. But what Bitcoin is like the fiat currency, because it's backed by nothing, right? Whereas a tokenized gold is legitimate because it's backed by something. It derives its value from gold.
Yeah.
Bitcoin derives its value from confidence, from faith. If people think it has value, then they're willing to buy it.
We can get to Bitcoin in a second.
Yeah.
But I just want to, I think we actually agree on this point that the digitized gold might be actually better than gold in a lot of ways. Because the tokenized, the version on the blockchain is transferable, it's divisible, it's more useful, right? As long as the gold is there to back it up.
Correct.
Right?
Yes,
Okay,
and so it improves on gold. It makes
Right.
gold better, just like paper made it better.
Yep.
Except, once the government came in and corrupted it, right, then that was a problem. But it wasn't a problem for gold. It was just a problem with government. But the gold that's issued through a token,
Yep.
you don't need a government.
Sure,
you don't need any private, entity that has a good reputation and is trustworthy can tokenize gold.
Yep.
It doesn't need to be a government that does it, and now people could use that as money.
Sure.
And even if there's a lot of different tokens, they're all fungible because
Sure.
gold is gold.
Let's talk about gold for a little bit. I have a magic box if we can get that up the stage. Yeah, Tintin, come over. Today is actually the first time meeting Tintin. Tintin is actually a KOL for Aster. Yeah, please. Yeah. Thank you, Tintin. it's pretty heavy.
Huh?
So
Oh,
I have a nice box here.
What is
It has,
that?
It has some, I think it's Kyrgyz language. I took it back from Kyrgyzstan. It has a certificate. I got this from a very important person from Kyrgyzstan very recently, just completely by luck. So we take it out. It's pretty heavy. I'll put this down. You can see, like it says Kyrgyzstan, 1,000 grams, fine gold, 99.9.9, and a serial number. Try it.
Yes. Yeah, it's heavy.
Is it real gold or no?
Well, I don't know. I mean, is this what you're trying to? I mean, let's see how it looks. Well, the color is a little. This is pure gold. My bracelet is pure gold, so the color looks a little off.
Yeah.
But I don't know. I mean, probably. Maybe it's not real gold.
It's given to me by a really important person.
Well, I know, but this is not a mint that I would recognize. I mean, the thing about mints is if you know the name of the company that minted it and you trust them because they have a reputation in the market that they want to protect.
Yeah.
But this, I mean, I've never heard of any of this, so I would have to probably assay it to know if this was real gold. But the color looks a little off compared to my bracelet, because this,
It might be your bracelet that's a little bit off. I don't know. So
it depends. Are you giving it to me?
I see.
Is it a gift?
This is the thing. I wouldn't.
Because if it's a gift, then I know it's. If you're not going to give it to me, it's probably real gold. If it's a gift, then maybe it's.
How much is this worth? Like one kg of gold right now?
Well, gold's about $4,200 an ounce.
So
I mean, that would probably be $50,000. I don't know. Do the math, but I mean, it seems like a lot of gold if it was real.
AI told me it's like 130,000 ish. Yeah, 130K ish.
What?
Right or not wrong?
No, gold. Well, gold is, as I said, it's about $4,200 an ounce.
Okay.
And what is that?
It's 1 kg. So I don't know.
A kilogram? How many ounces in a kilogram? 32?
132?
Huh?
What?
30?
132K? All right. See,
So
I would want to give you. It's 130. I don't want to give the whole piece. I can give a little bit, but I can't
Well, that's why you tokenize it. Then you can give me half of it.
Right. So
But they also make, we sell at my company, Schiff Gold.
Yeah.
We sell 10th ounce gold coins.
Right,
So,
right.
you can have small denomination,
And
we sell them by reputable mints. So
Yeah.
you know that they're real. You don't have to guess. You don't have to try to assay it. You look at the coin, and you can tell if it's been monkeyed with.
Yeah.
But
See, I want to give it to you, but I don't know if you can take it out of the country.
I'm sure
Right?
I can just
like
put it.
how many days are you staying?
You know what? No one's. I can put that in my bag. No one's gonna care.
You sure?
Yeah.
This country
No,
some countries will put you in jail.
For carrying that?
Yeah, depends if you declared or not, etc. Where you got it, who you got it from, or the source.
Well, if I tell them I got it from you, what do you?
But you'll probably be even bigger trouble. But but it is real gold. It is given to me by the president of Kyrgyzstan. So I have not.
Well, you probably have some sentimental value now, so you don't want to give it to me.
Well, especially after this, you'll have some sentimental value. But we'll see. So, but the point is though, if I give you Bitcoin right now, right? We can verify instantly you got Bitcoin in a number of ways.
Yeah, I understand that. Yeah.
Right, and also even with a tokenized gold, right? So if you send it to someone, you can verify it almost immediately. Right?
Yeah, the same with tokenized gold. Yes.
Yeah. So now I want to address your question about gold, Bitcoin, not based on anything. Do you use the iPhone or I saw you use
I have an iPhone, yeah, right here.
You don't use Android, right?
No, I have an iPhone.
And you use the internet, obviously. So you use X, Google, Facebook, etc. And Google is virtual, right?
Excuse me?
The internet is virtual. The internet has like nothing physical.
Yes, yes, it is. Yeah.
So when you use X is completely virtual. There's nothing physical about it. But X is worth a lot of money, right? It has value. It's a utility tool, right? So internet has value, right?
Yes. Yeah, there's no disputing that.
So Bitcoin itself actually doesn't exist. I don't know if everybody in the audience knows about this or not. There's no Bitcoin on the blockchain, physically or virtually. All there is records of transactions on the blockchain.
Yes.
Right?
Okay.
So when people say, I send you one Bitcoin, they are not sending one Bitcoin. They just want another transaction on the ledger said, I send you one
Right,
Bitcoin.
nothing actually moves.
Nothing
right?
actually moves.
There's nothing that actually goes anywhere. I get that.
And the way we calculate, the way we figure out this address has one Bitcoin is actually we go through all the transactions on the blockchain. We look at all the inputs and all the receiving and all the sending out. And then if there's a difference positive, then this address has one blockchain, one Bitcoin, right? So Bitcoin actually doesn't exist anywhere. But it doesn't mean that because it's virtual, it has no value, right? So Google has a lot of value, Twitter has a lot of value, and when there's many virtual things that has value. So an item's value is not associated with its physical properties. Even with gold, right? The industrial, like the computer chips, which use gold, the value of gold is much less than the value of the gold we give because it's a rare commodity, precious metal, right?
Yeah, well, first of all, just because something is intangible, right? Yeah. I mean, there are tangible assets, there's intangible assets. I'm not saying that something has to be tangible to have value. I mean, all companies, I mean, your company probably has goodwill that, that has value, but it's not something you can touch or feel. It's an intangible asset. And what makes Bitcoin worthless, as far as I'm concerned, is not the fact that I can't touch it or taste it or smell it. I guess I recognize that things can be intangible and have value. It's that you can't do anything with it. It doesn't have a utility beyond the fact that, yes, I can transfer it to you and you can transfer it to somebody else. And the whole methodology, the way it works, yes, it's very smart. The way the whole system is set up, I understand that. But at the end of the day, when I transfer my Bitcoin to you, I've transferred nothing. I have nothing, I give you nothing, right? When I transfer tokenized gold to you, I've transferred gold. I've transferred the ownership of the gold. And what gives the gold the value is what you do with it as a metal. Gold has properties that other metals don't have, that other elements don't have, and it's needed. There are industries that need gold. They must buy gold. They can't substitute copper or another metal. There are things that only gold can do, and companies need gold. Now, because gold is scarce, there's not just an abundant supply of gold. Because it's very valuable, but there's not a lot of it, then it's going to have a high price just by supply and demand. But even if people say, well, the real price, it's not, the investment price is $4,000 an ounce, but maybe it's, it's only worth some lesser amount, I don't know. But the reason for the price, right, price is always going to be determined by supply and demand. One of the functions that gold serves for central banks is it backs up their currency. It's a monetary reserve asset, and that's also a use for gold, and that helps determine the price of gold because you have central banks that need it, and they have to bid into the market to obtain it. But because gold doesn't decay, right, it doesn't lose any value over time. When I own gold, I don't just own what I can do with it today, but I own what somebody else can do with it in 1,000 years, in 10,000 years, because gold doesn't go away. I mean, the gold that was mined 10,000 years ago, it's still here. I mean, you know, it doesn't go anywhere, and it's no different than it was in the past. And so gold's price today represents the present value of all of the uses from now until the end of time.
Sure.
You don't have that with other commodities that have a shelf life, that decay, they rot,
okay,
right? Gold is unique in the fact that it never goes anywhere. And that's what makes it a store of value too, because when I own gold, I am storing the use of that gold from now until the end of time. Even if I don't use it myself, if I just hold on to it, somebody somewhere in the future is going to use that gold. But there are people that also need to use it today in the present.
So you said a lot of things there. There's actually a lot of things that are very interesting, and we're so close to get you over.
I wouldn't be so sure about that.
So first of all, on the gold, right? You said that the gold is always there. How much gold is there in the world?
Well, I don't have to know exactly, but I know it's pretty scarce, and the supply grows relatively slowly.
We don't know, right? We don't know.
Well, no, I don't know how much is in the Earth's crust.
Right. So tomorrow we can find another. No, China can find another big mine, and then there will be more gold. And now there's synthetic diamonds. Later on, we may be advanced enough in chemistry to be able to. That's a holy grail. Everyone wants to do synthetic gold. But
they've had alchemists for centuries trying to figure out how to make gold. And in fact, there was an article recently that somebody figured out how to make a speck of gold.
I don't think that was true, though. But the point is, though, with Bitcoin, we know exactly how much they are. All the things you said about gold, like till infinity, we know how much gold. We know how much Bitcoin there will be. And we know exactly where they are, right? So it's definitely a finite supply. You also mentioned very, very interestingly on gold still, I'll get to Bitcoin in a second, that the central banks use gold to back their currency, which we all know that stopped in 1971, right? So now, as you said, the currency is not really backed by anything. So gold is no longer used in that capacity.
Well, it's not used, the currencies are not redeemable in gold.
Yeah.
But if you have currency, and if your currency starts losing value in the market and you need to defend it, you need to prop it up, you need something to sell to buy back your own currency. And so central banks can use gold to do that, to secure the value of their currency in the market. You can sell your gold and buy back your currency and keep it propped up. So that's why the central banks need a reserve asset.
So recently when the when the gold price goes up, that means a lot of central banks are probably printing currency to buy gold themselves, right?
Well, I mean, central banks are printing money all the time. That's where inflation comes from.
So you mentioned earlier on the utility value. So you recognize that Bitcoin is not anything virtual. It doesn't have to be tangible to have value, right? So and gold's
right. It has to have a use. It has to do something.
No, but the gold's utility in commercial use is not where the value is from. Gold's value derived from is a rare commodity. Right? And Bitcoin has a lot of utility. Bitcoin is not just for sending and receiving. Bitcoin is an entire industry. It's a new technology for money.
No, it's not a new technology for money because it's not being used as money, and it's not really money because it's not a commodity. It's not money by definition is going to be the most liquid commodity, and Bitcoin doesn't really qualify, even though the government might classify it as a commodity.
So there's different definitions for labels. There's a label for money, and there's a label for value, right? Bitcoin is a $3 trillion asset, and it's still growing. Right?
Well, so Bitcoin has a price. I mean, there's no arguing that it has a price, but it has a price because people want to buy it, and because a lot of people who own it don't want to sell it because they think the price is going to keep going up. So, but that doesn't mean that it has any underlying value just because it has a price, just because people are willing to speculate in it. But that's what Bitcoin is being used as. It's not being used as money. It's being used as a speculative digital asset. I mean, to me, people collect Bitcoin,
So I think
and they
have a
collect
very,
Bitcoin because they think the collection is going to be more valuable in the future.
So I think you have a very narrow definition of money, which is what you believe and what governments believe, right? So for example, if we ask the audience here, how many people believe Bitcoin is money? Like, well, let's see, right? So, but this is an unfair crowd for
Right,
you.
but you know,
this is an unfair crowd. But the point is, though, many people do recognize Bitcoin as money. Well, whether we call it money, how you define it, we can debate about that, the definitions of it.
well, nothing is priced in Bitcoin, so it's not a unit of account. When you know,
Price is relative, though. Like, no, we can reverse calculate. Like the price of U.S. dollars in Bitcoin is 0.00.
no, but that's like an exchange rate. But I'm talking about merchandise, people that are selling goods and services, which would include, you know, labor. Nobody quotes wages or prices in a fixed quantity of Bitcoin, right? You're not going to. It doesn't happen anywhere. To the extent that even somebody was to get paid in Bitcoin, they would have a salary in dollars or in euros, and then when it came time to get paid, they would try to figure out how many Bitcoin they need to equal that number of dollars or number of euros. It's not a unit of account like money, and it's not being used as a medium of exchange. But people, most of the Bitcoin, it's like traded on Binance, and you know, it's, you know, people gamble with it. They buy it and they sell it, they day trade it or they hodl it, but they're not using it, I mean, as a medium of exchange. It's not a unit of account, and it can't be a store of value because you can't store what you don't have.
Just because some things prices fluctuating doesn't mean you couldn't get paid for it. I got paid in salary in Bitcoin in 2014. So 11 years.
What was your salary?
Was like, I don't know, wasn't that high. It was like 100K-ish at that time.
No, but no, you said it was in Bitcoin. Was your salary a quantity of Bitcoin?
Well, as you said, we'll rebase every month, right?
But yeah, but that's not the same thing. If it was money, somebody would have to say, my salary is a tenth of a Bitcoin, you know, a month, and that's all I get. I get that Bitcoin, whether it's up or down. That's my salary. It's fixed in Bitcoin.
I could actually show you a number of contracts that if Binance has, we do it in Bitcoin, right? So for example, one of the early investors or business partners that want to exit, we said, look, we're gonna give you this much money. You can take in US dollars or you can take in Bitcoin. And we fix the Bitcoin at that time, and we hold that.
Oh, you fixed the price.
We fixed it in Bitcoin, and that person got a lot more Bitcoins over time. The same number of Bitcoins, but Bitcoin's value went up.
Right.
But
that's a unique situation where you have somebody who wants Bitcoin as a Bitcoin investor, and they want to get. Yeah, so they're just.
It's a small number, but people do transact in Bitcoin as a unit. It happens.
Well, that's the exception, not the rule. The vast majority. Yeah. I mean, almost all of the Bitcoin transactions are not to buy goods and services. They are people buying and selling Bitcoin to each other without any work being done, without any goods being purchased, right? It's just trading. That's all that's happening.
It's not necessarily true, right? So the stock. So I think we're getting off topic a little bit. I'm not arguing whether Bitcoin is money or not. We're really.
You just said it was money.
Then we would be arguing about the definition of money, how we define that level. But the more important part is whether Bitcoin is valuable, right? So I think whether it has value, and that's the core definition. Well, that's the core debate. Whereas I think many people in this room obviously recognize Bitcoin has value. Bitcoin has, and the Bitcoin value, part of it is come from speculation on Binance, on other exchange, but a large part of it comes from the utility value of it. The fact that I can use it, I can transport it. I move to different countries all the time, right? So with this piece of gold, it's not easy for me to take it across different countries. Whereas it's a good store of value, which is true. But Bitcoin has risen in value, not just a store of value. It has actually gone up in value over the last 15 years.
Yeah. Well, first of all, tokenized gold solves that problem because you can take the tokenized gold with you. But
the tokenized gold, I have to trust a third party.
All right, well, just find a trusted third party. I mean,
which I could, but Bitcoin, I don't have to do that. That's utility.
Well, but then you have to trust something more. You have to trust that.
I trust the technology.
People still want Bitcoin. Yes. You know, you mentioned that there's a. So it's there's 21 million Bitcoin.
It's very easy to trust people still.
Yeah. All right. So there's 2.1 quadrillion Satoshis, right? They're not that scarce when you express it that way. But there's a lot of Satoshis out there. But yes, there is some maximum quantity of Satoshis. that are out there. But none of it matters if people don't want them. Look at the last few years, because Bitcoin today is 40%.
How many years have you been saying this, though?
Well, for a long time, right? But look, Bitcoin today is 40% lower priced in gold than it was 4 years ago.
Yeah.
So over the past 4 years, since Bitcoin peaked,
Is that true?
yes.
I'm not sure if that's true.
Yeah, when Bitcoin was 69,000 4 years ago, it bought 37.2 ounces of gold. Today, and I just checked before, it buys 22.15 ounces. So Bitcoin buys 40% fewer ounces of gold today than it did 4 years ago.
Gold did better than Bitcoin in the last 4 years.
4 years, a lot better.
How about 8 years?
No, but here, let me finish the point that I'm making. Right, over the last 4 years, think about what's happened in Bitcoin. First of all, we had all of the Bitcoin ETFs that got launched that didn't exist to buy Bitcoin. We got all these companies, copycat from Strategy, but we also have Strategy that borrowed, $40 billion to buy Bitcoin, or issued stock and debt to buy $40 billion. But we had other crypto companies buying Bitcoin. We had ads at the Super Bowl, we had celebrity endorsements, we had the NFT craze, we had El Salvador, we had the Bitcoin Strategic Reserve. We've had all of this money and hype and promotion, unprecedented. That's all anybody talks about. You go on financial news stations, every guest is talking about Bitcoin. Every commercial is Bitcoin or crypto. They're the biggest advertisers. They're the biggest donators to political campaigns.
So you're only talking about one failed exchange.
Right, but the price has gone down during all of this, with all of this promotion, all of this hype. It's gone down. And if Bitcoin has not been able to go up in 4 years, if it's lost 40% of its value in real terms, despite all of this, why would it go up in the future? It seems to me
Bitcoin
that
4 years ago was
it's
much
over.
lower value, though.
Huh?
Bitcoin 4 years ago was much lower value, just because.
No, it's down. It's down 40% in gold.
Comparing to gold.
But if you're saying it's digital gold, then that's the best way to price it.
Well, no. If you compare two assets, you can pick any random time period. One asset will.
Well, I'm not random. I'm just picking the high from 4 years ago. But my point is, you had all of this hype. Why isn't Bitcoin? Look, you have Michael Saylor is coming out here. Bitcoin's going to be $10 million of Bitcoin. All right. Well, why isn't it there now? Why? I mean, if it's really that valuable, the market would adjust the price now. You can't just buy it. I mean, he acts like you just buy Bitcoin and you're guaranteed to make all this money. It's a sure thing. Go out, mortgage your house, bet the farm, borrow against your business, put everything you have, because he says it's a sure thing. Well, if it was a sure thing, the price would already be there.
Well, the price takes time to be there. Like, even if you say like gold will be worth more later, doesn't mean that it will be worth.
No, I just think the dollar will be worth less. The euro will be worth less. Again, they keep printing them.
We agree on all of that.
Right,
yeah.
But it does. But Bitcoin is irrelevant for that. Bitcoin's value is determined solely by the number of people who want to buy it versus the people who want to sell it, because there's no user for it. Like like with gold, there is real demand. There are people who need to buy gold and will always buy gold. And if the price of gold goes down, they're going to buy more. If it goes, but in Bitcoin, nobody needs it, but people want it. But they want it because they think the price is going to go up. But the minute they stop believing the price is going to go up, then there's no reason to have it.
Let's talk about the future a little bit more. The future generation. The younger kids.
Yes.
Do you think they will like Bitcoin more or gold more?
Well, they're going to like gold more because their friends will have lost a lot of money in Bitcoin. And there's one really good thing about young people.
How about your son?
But he's already sold his. But the good thing about losing a lot of money in Bitcoin when you're young, and is that when you're young and you lose your money, you have a whole lifetime to earn it back, and you have a lifetime to benefit from the experience of losing that money. So the good news for all the young people that are going to get wiped out in Bitcoin is that it will prevent you from losing more money in the future, right? Because when you're young, you don't have a lot of money to lose. But as you get older and you accumulate more, that's when it's more important not to lose your money. So this is a valuable lesson. So
Bitcoin went from no value in 2010
yes.
to 50 cents for the first Visa transaction, to now 100,000, well, 90,000 right now.
Yeah.
how many people lost money on Bitcoin? How many people made money on Bitcoin?
Well, how many of the people who have their hands up have actually sold their Bitcoin and realized those gains?
A few.
Not that many. But look,
again, this is a different crowd, right?
right.
Obviously. Yeah,
But there's no disputing that the people who bought Bitcoin back then have made a tremendous amount of money. I mean, I know a lot of these people who have made hundreds of millions, billions.
So you know them?
Yes, a lot of them are my neighbors, but the reason they can afford to live in my neighborhood is because they sold a lot of Bitcoin. That's how come they can afford it. But the money that they made.
A lot of people made a lot of money on Bitcoin that you know.
Yes, they got in early.
Okay.
The people who bought it over the last couple of years haven't made any money. These are the people who are losing the money that enabled the early buyers to make money. The people who are making money are cashing out. All Bitcoin does is enable a transfer of wealth from the people who buy Bitcoin to the people who sell it, right? When Bitcoin is created, there's no real wealth. We have like 20 million Bitcoin now that we didn't have 15 years ago. We're no better off because those Bitcoin exist. They don't actually do anything. But what has happened is some people have been enriched at the expense of other people. Now, the people who have lost a lot of money in Bitcoin don't even realize they've lost it yet because they still have the Bitcoin, and the Bitcoin still has a $93,000 price or whatever it is right now. And so they don't realize they've lost the money. But if they try to get out, that's when they're going to realize it's lost. Because if a large percentage of people who own Bitcoin want to get out of it, there is no market for it. The market will implode.
Let me share a quick story I shared earlier today. When I was going through the U.S. troubles, I got a letter of support, right? So one of our users from Africa writes me, and he says, before Bitcoin, it takes him 3 days to pay a bill. He had to walk from his village to a place, pay it, and walk back. So 3 days a month, he had to pay the bill. That's the amount of time it takes for him to do that. After Binance, he has access to crypto. And now paying the bill is 3 minutes. And because of that, he accumulated over time $50, $100, $300, $1,000. $1,000 in some really poor country in Africa is a lot of money for that. Yeah. So that improves people's life.
Yes.
Materially improved his life.
Yeah,
so
I mean there is some value there, but you don't need Bitcoin for that. You can use a stable coin. You can use tokenized gold. You can do any,
So yeah, you can use a stable coin, but you still need to use the blockchain technology. And the best use case for blockchain technology today, the best app is still Bitcoin, right? So Bitcoin is the largest market cap coin. And but you're talking about the blockchain technology. The technology is promoted with Bitcoin plus other cryptocurrencies. You mentioned a point earlier, which I want to touch upon. Just because anyone can issue a token doesn't mean those tokens have value. But Bitcoin is very different. Bitcoin is we already have a large community supporting it. Some of the major cryptocurrencies, of course, I'm biased, are also closer to that category. Right? So just because you issue something does not create value. But when people use it, it has value.
Well, again,
so Bitcoin is used by this guy in Africa, in many other places. So and the use case is increasing. It's not decreasing. This is not. It's not just one thing that doesn't change anymore. Yeah. It's the technology that keeps evolving.
I don't see. In fact, I remember when Bitcoin first spiked up to $1,000 in was it 20?
And you were against it.
Of course, yes. But although at the time I thought the price could go up. I just thought that it was obviously people were buying it, and I thought that the bubble could get bigger before it popped. But fundamentally, nothing has changed about Bitcoin. But the point I'm making is back then, I remember a lot of stores. There were a lot of stories where all these companies were coming out, oh, we accept Bitcoin, we accept Bitcoin, we accept Bitcoin. And the reason that the stores were doing this is because all of a sudden people with Bitcoin had money, because now the Bitcoin was worth something. And so merchants were trying to appeal to the wealth of the crypto people by saying, hey, you can spend your Bitcoin here, you can spend your Bitcoin here. There's actually less of that now. I mean, I think the whole idea of using Bitcoin as a currency, it's even less popular now than it was back then. And in fact, people have even acknowledged that, it doesn't work very well as a currency. There are other cryptos that are much better. That's when they reinvented it as digital gold, because it didn't work as a digital currency. So they said, okay, well, it's digital gold.
Oh.
Well, it's not digital gold either, because it's nothing like gold, right? It's not, I can't, make a picture of a hamburger and then say I have digital food. It's just an image of a hamburger. And if you eat a diet of digital food, you're going to starve to death.
Let me check in the crowd. Who has a Binance card on them? I don't have one with me. Can you volunteer? Just the
you
Binance
have a
card.
token, right? BNB is a token.
No. The Binance card.
But Binance is a token
which
too,
is
right?
a Visa card. Yeah. If you could.
Huh?
Can somebody help bring that? So when you mentioned that crypto is not used for payments, and you see it much less, I actually want to show you something, which is yeah, thank you. Sure, yeah. You see, you see this thing?
Okay, yeah. Well, basically what you're saying is you can use this, and it will sell your Bitcoin and pay a merchant in dollars.
Absolutely. It works really well, yeah. And
that's exactly what I'm going to do with gold, right? But
using the blockchain,
no.
right?
No, it
Tokenized
doesn't even need to use the blockchain when I'm using a debit card or a debit card. But
my point is,
what you're doing is you're selling your Bitcoin and then you're paying with currency. Just like I have a brokerage account, and I can issue you a debit card against your brokerage account, and now you could use that. But you're not using Bitcoin as money. You're selling Bitcoin to get money, and then you're using the money to buy goods and services, not the Bitcoin. That card just ties you in. But what I want to do with gold, I don't want people ultimately to sell their gold and pay cash. I'd like to see the gold actually change hands from buyer to seller so that the entire transaction stays in gold the whole time. We don't need to convert the gold into fiat. But you're converting your Bitcoin to fiat in order to use it.
How many people use gold as payment today?
Well, probably hardly anybody uses it as payment.
More or less than this.
But you're not using Bitcoin there either. The Bitcoin gets sold. If you use that card, whoever is on the receiving end of the transaction does not get any of your Bitcoin. All they get is dollars.
Yeah. So it's actually two halves. So we're breaking this process into two halves, right? So Bitcoin payments, crypto payments has historically had this problem where the merchants don't want to accept crypto or may or may not want to accept it. Without the merchants accepting it, then the users couldn't pay. But this solves it because we are now, as intermediaries, from the user perspective, he just swiped his card and crypto gets deducted. He doesn't care about the conversion into cryptocurrencies and pay it. The merchant gets fiat currencies, right, or whatever they choose to get. And we, in the middle, handle the conversion. So we solve both sides of the problem.
Yeah, but I want to do that same thing with gold. But the thing is this. I think eventually, when inflation is a lot more pernicious in the developed world, I believe a lot of merchants will actually prefer to receive gold. Because I think
Are you sure about that?
Yes, because what's going to happen is...
How many of them accept it today?
They don't have the ability to accept it. They don't even. It's not even an option. But let's say you're a merchant, right? And inflation is not 2% a year. It's two. Let me finish the point.
I get the benefit.
Let's say inflation is 2% a week, right? And so I have inventory that I'm selling, but I sell my inventory. And now when I have to rebuy it, it costs a lot more because between the time I sold it and the time I restock, the prices have gone up. But if I can sell my merchandise and get paid in gold, now I can use my gold to restock and the prices wouldn't have gone up in terms of gold.
The gold price dropped in the last couple of weeks, right? I mean, it went to a high, but then it dropped in the last couple of weeks.
There are periods of time where gold volatility spikes a bit. But generally, it's not that volatile.
At 10% for some merchants, like some merchants' margins at 10%. Right?
Oh yeah, I know. And Bitcoin can move 10% in a day.
But my point is, there's a few million of these cards out there. There's a few million users using Binance Card.
Yeah, and maybe I could use you to do my gold cards.
We'd be happy to.
Because I'm talking to banks, I got to see who would be the best issuer of the card.
For Bitcoin, I'm not against gold. But I'm just saying that Bitcoin is a better version of gold. But my point is, you said that people don't use it for payments, but people use it silently.
Right, but that's not using it for payments. That's
But from the user perspective, they are using it for payments. Now the user doesn't have to worry about selling Bitcoin into cash, converting the currency, and then charging the
right. But I can do
card.
that same thing again with gold or anything else. I can do it with my stock portfolio. I mean, I have customers that have brokerage accounts, and I can give them a debit card where every time they use it, it margins their brokerage account.
But that's great.
And then we can sell some of their stocks.
That's great. But my point is, people are already using crypto for payments.
No, they're not using crypto. They're using crypto as collateral so that they can sell it to get the currency that they use to make the payment. There's a difference there. It's not being used to make a payment. You're liquidating your Bitcoin, and then you're buying something with the proceeds.
Again, Peter, you're making the definition that for the user for payments, that includes the part that we handle for them.
Yes.
Right? From the user perspective, he swipes the card, he gets the good.
I understand.
His crypto gets deducted,
Yes.
right?
Right.
Right. So,
but there is a difference there. But of course, Bitcoin can collapse in price, and now it's going to be a big problem for people who are planning on buying stuff with their Bitcoin, and now the Bitcoin doesn't buy very much because when they go to sell it, they're not going to get that much fiat.
I think most people in this room will not have that problem because they pretty much all have enough crypto they have enough crypto.
Well, they have enough at $93,000. I mean, what if it's $9,000? I mean, the price could be a lot lower. You don't know what it's going to be.
I mean, all prices fluctuate. Also, even if we talk about fiat currencies, the price fluctuates, right? So
against each other, right? They don't. There's
against each other, against real purchasing power. Right, so against purchasing power, every price fluctuates. So one thing is, many people think about stable. I think stablecoin is a complete misnomer. There's nothing stable in this world. Everything fluctuates against it.
Well, it's stable against itself. So a dollar stable coin is stable against the dollar. But the dollar has no stability whatsoever. But that's why, to me, everything that you could do with Bitcoin, I could do with gold. And so rather than have a token backed by nothing, why not have a token backed by something? Why prefer a fiat cryptocurrency when you can have a real one, when you can have one that's backed by gold?
It's actually the reverse. Whatever you can do with the gold and fiat, we can do in Bitcoin.
No, you can't, because you can't store value with Bitcoin.
Bitcoin has been a tremendous store of value.
No, it hasn't. It's been a great speculative asset that has appreciated. Bitcoin's price has gone up.
For the last 15 years, for its entire existence.
Right, but first of all, that's not a lot of time in the scheme of things. But Bitcoin has price. I don't dispute that there is a price for Bitcoin, but price and value are two completely different things. You cannot store a price. Bitcoin has a price today. I don't know what the price is going to be tomorrow, but it has no value today, and it's going to have no value tomorrow. But that doesn't stop people from buying it. But the value that most people place in Bitcoin is that they think they're going to get rich if they buy it. They think if I buy this Bitcoin and I just hold on to it and ride out all the volatility, I'm going to be rich. So that's what people are buying. They're buying that lottery ticket that's going to pay off. And when people don't want to buy that anymore, when people stop believing in this fantasy that Bitcoin is going to the moon, then there's not going to be any demand for it anymore.
You're looking at that purely from a speculator's perspective.
Well, that's who buys Bitcoin, by and large. Now, look, most of the people in this room maybe are diehard Bitcoin maxis that actually believe all this nonsense. Fine. But the vast majority of people buying, who do you think is buying Bitcoin ETFs?
How many people in the audience are developing something in the Bitcoin ecosystem? Developers, coders, project. Not a lot, but there's quite a few developers here, right? So not everybody's a speculator. So speculators, yes.
No, this room, this is a biased sample.
Of course,
I mean, if you look,
exists.
Right, yes, but this is a tiny part of what's driving Bitcoin at this point. If you look at who is buying the Bitcoin ETFs, right, that have been the lion's share of the buying before these corporate treasury companies, these are not, true believers. They are just buying it because it's going up. They're seeing all the hype, and they're being told, you got to buy this. It's the digital. It's going to go up. It's the new thing. And so people are buying it in their stock portfolios. They don't care about any of the qualities that you talk about that Bitcoin has. They don't care about any of that. They don't self-custody it. They're buying it in their brokerage account. It's a symbol, and they're looking at it to go up. And when it stops going up and it starts going down, they're just going to sell. They're just going to move on and take their chips and put them in someplace else.
Peter, what you described exists in stock markets, in traditional fiat markets as well. So there's speculators in every market, and then there's builders who are building the ecosystem, who are building utility value. The speculators are always loud. That's why NASDAQ exists, right? So all the guys who are buying Bitcoin ETFs, they already bought stocks. They already have stock ETFs, currency ETFs, etc. So that exists in traditional markets as well.
Yeah, look.
Just having them doesn't mean that Bitcoin has no value.
No, well,
right?
yes, just because there's speculators in the stock market too doesn't mean that legitimizes Bitcoin because they're speculators. Look, when you're speculating,
it's reverse. Just having speculators does not delegitimize.
But when I'm speculating on a stock, at least in theory, I'm speculating on a business, and I'm making a bet that that business becomes more valuable in the future than it is today because it has more sales, it has more earnings, it pays a higher dividend. So I'm betting on the growth of a business.
Just look at this company. Go Binance.
Right. Well, sure. Well, Binance is not big. Binance is a great business right now, right? You're the casino. The house wins, right?
No, we're
not gambling.
We are a licensed we're a licensed financial institution in 30-something countries now.
All right. Well, okay. Apart from that, but I'm talking about the people that are just trading Bitcoin on the platform. But I just forgot what I was talking about before you interrupted. What was the point that I was about to make? I just don't even remember.
We were talking about speculators.
Oh yeah, right. So you're speculating on a company becoming more valuable. When I buy Bitcoin, Bitcoin is not going to generate more income in the future than it does now because it generates no income now. Bitcoin is not an income-producing asset. When I'm speculating on Bitcoin, all I'm doing is betting that somebody in the future is going to pay a higher price than I did. I'm just betting that there's going to be more demand for Bitcoin in the future than there is now, and that the price is going to be higher. So it's a pure speculation on price without any other factor. And so Bitcoin is far more speculative in nature than what people are doing in the stock market or in the real estate market. Now, most people, when you're buying a stock, I'm buying a business now that generates income that pays dividends. Not all stocks are simply, gambling on the growth of a business that may or may not come. But Bitcoin is 100% speculation. In that I'm buying it solely because I believe that somebody will pay a higher price. And the only reason that that person is going to buy it is because they believe that the next person is going to pay a higher price for the exact same thing,
but Peter,
even though it hasn't changed at all.
But we just established that the speculators are only a small part of the ecosystem. Even though they're very loud, they trade a lot. But we just discussed this point, right?
But that's what's driving the Bitcoin price.
You're saying that this small section of speculators represent all of crypto, all of Bitcoin. That's not true, right?
Well, that's what drove the price up to 90,000. Without all those, where do you think Bitcoin's price would be right now if all this speculative money hadn't poured in, to all these ETFs and all these Bitcoin treasury companies Peter, that have been buying up Bitcoin? Without all that speculative money, where do you think the price would be?
I don't think I can convince you on this. But again, you are taking a small sample of the
It's
population.
not small.
Small or big, but you're taking a portion of it and sort of overgeneralizing that to the entire industry. If it's only speculators, the price wouldn't be there. There will always be some fundamental holders that support the price.
Well, it's mostly, I would say, over those past 4 years, right, where Bitcoin is down by 40% against gold, I would say that at least half of the people who own Bitcoin today bought it over the last 4 years.
I'm not sure. Yeah, I'm not too sure.
And probably more than half the value, half the market cap was purchased in these last 4 years.
Well, every peak, the more value gets purchased at a later stage. But
people are, and so there's a lot of people now.
In terms of number of people, I'm not too sure because in this cycle, there's a lot of ETF, as you said, there's a lot.
Right.
Of ETFs.
Well, that includes all the individual shareholders in these ETFs.
Yeah.
Right. They own Bitcoin through these ETFs, and so they've come in recently. They don't have these big gains that people have that came in a long time ago.
You can't have big gains just you buy any asset. You can't expect big gains like a year.
Yes, they are. Of course, the people that bought Bitcoin expected big gains. They were told. I mean, go back to the beginning of the year. What were all the look? Bitcoin is lower now than it was January 1st.
But
if you go back,
higher than November last year.
Well, yeah, because it sold off before then. But if you go back to all the forecasts that were made by guys like Saylor, beginning of this year, where was everybody saying Bitcoin was going to be by the end of the year? I mean, nobody said lower. It was 200,000, 250,000. There were all these, pie in the sky forecasts. So people were buying Bitcoin expecting to go to the moon. They weren't expecting to lose money, which is happening.
There's a few guys who make forecasts. I usually don't make forecasts. But the price goes up and down, right? So people invest, they need to take the risk. Or they need to understand that.
Well, I think a lot of the people...
The same thing with gold. Same thing with stock markets, right?
Well, but you haven't had a big influx of private investors in gold. Look, I've been in the gold business. I've had Schiff Gold since 2010.
Why is that? And there has been an influx in crypto, but there hasn't been in gold.
Because gold doesn't have a sexy get-rich-quick story to it.
But you just said gold will go higher quicker.
Yeah, well, gold has done a lot better than Bitcoin the last couple of years, last 4 years. But most people have bought Bitcoin. They haven't bought gold. But central banks are buying gold. I mean, they know what they're doing. They're buying gold. They're not buying Bitcoin. But eventually, I think private investors will start buying more gold. And I think the air coming out of the crypto bubble will help move that process along. In fact, I think one of the reasons that Bitcoin was able to do so well, from when it started until recently, was because gold went sideways for about 12, 13 years. Gold went from...
And that's exactly the time when Bitcoin started.
Yes, well, because gold went from $300 an ounce, under $300 an ounce in 1999, 2000, and it went up to $1,900 in 2011. Right, and so it had a big gain, and it attracted some money as a result of those huge returns. But then it just kind of went sideways, and Bitcoin comes on the scene, and it comes out of nowhere, and it's going way up, and it's being sold. Hey, this is digital
I think
gold.
We can stop the debate
this is better
right there.
than gold. This is gold 2.0, and as long as gold wasn't performing. That created an opportunity for Bitcoin to kind of steal some of its thunder and get money out of gold stocks, into crypto stocks. But now that gold has broken out of that consolidation, gold has now doubled in the last 2 years, and silver now is caught up, and now silver's at record highs. Silver's almost $60 an ounce, so it's broken through its $50 double top. So now we're in another stage of precious metals bull market where gold and silver are not going sideways. They should continue to go up year after year for many, many years to come. And so in that environment, I think it's very difficult for Bitcoin to compete because now the people who have gold have no reason to sell it to buy Bitcoin. And I think people who made the mistake of selling their Bitcoin a few years ago and buying gold are going to regret that, and they're going to try to reverse that trade. They're going to try to sell their Bitcoin and get back into gold. But that's going to be a big problem because there's no buyers for the Bitcoin. And so I think the price will collapse.
All right, so I think we can agree to disagree on that note. I do hope gold to be successful. I do hope your digitized gold to be successful.
Well, maybe we could work together on that project.
Absolutely.
And I want to get my token listed traded on Binance.
Absolutely. So we welcome you to the blockchain digital world. And I, of course, believe completely differently that I think gold will do well, but I think Bitcoin will do even better. That's my view. But
I don't think it will be able to compete with gold, especially when it's
we'll find out next year.
Yeah. Well.
But lastly, thank you, Peter, for coming over, and I wish you all the success in digitizing gold.
All right. Well, my pleasure. All right. Thank you.
Thank you so much. Yeah. Thank you.